Hi, this is James Shug at Westpac with the markets report for Tuesday, March the 27th. European markets started off with in positive territory today, a bit of a catch-up, I suppose, to the ongoing strength in US markets last night, following the comments that were interpreted, the comments that were interpreted by the market from Bernanke as suggesting that there might be scope for further policy easing, or at least that the current easy stance would be required to ensure that consumer spending and business activity remains strong enough to keep pulling the unemployment rate down. So there was a positive reaction to that here in Europe as well this morning, but as the data flow came through from the US later today, things turned a little bit negative. We had consumer confidence came in a bit softer than expected. The issue there was that although consumers felt comfortable, in fact the index on the current conditions rose, the expectations component pretty much offset that. A bit like Westpac's view, really. We're acknowledging that the US economy is delivering some good numbers at the moment, but we don't expect it to last. The other data today, the US, was the Richmond Fed's factory index. It fell quite sharply from 20 down to 7. And in the past, that index, the Richmond one, has been a decent indicator of turning points in some of the other more closely watched indices that cover the industrial and broader economies, broader economy in the US. So I think markets have gotten onto that now, and so that may have had something to do with the negative sentiment that came back later in the afternoon. House prices figures came out. They were down, but not by as much. This was the Case-Shiller measure of house prices. But still, on an annual basis, we're looking at an annual decline of, 3.8% on the 20 city index that they publish. So when you think about it, I mean, there's been a bit of softer news on the US economy. We had pending home sales, new home sales, consumer confidence now. Our view is that the jobs numbers perhaps have been a bit inflated in the US by favourable weather conditions that meant that people weren't laid off as much in outdoor industries, but that means they won't be hired again in those same industries because they've still got those jobs. So it could mean that we're going to get some softer jobs numbers from here on. The other news is we just heard that Bernanke, Fed Chairman, is going to give a very rare TV interview with Diane Sawyer, I think, tonight in the US. So that's worth watching for. Given the market reaction to his comments yesterday, where really he was just restating the conditional commitment to keep interest rates low for an extended period, imagine how markets could react to something he might let slip with Diane. So that's the story today. In terms of markets, at the London close, we've got the FTSE down just over 0.5%. The French market's down 0.9%, and the Germans are down. Actually, no, the Germans are pretty much flat on the day. A steeper loss in Spain, it's down 1% there, and the Italians off 0.7. The Dow, New York lunchtime, is unchanged. It was a little bit stronger earlier, but the confidence numbers put paid to that. In terms of commodity markets, we've got copper prices down 1/3%. 1/4% drop in the oil price. It's down to $106.78 a barrel, and gold prices down a tiny bit, 0.04% at $1,687 an ounce. The Aussie dollar is just back below 1.05 against the US dollar. It's slipped a little bit, most recently actually in the post-US data period, with commodities off and equity markets coming back a bit. We've got the Reserve Bank's Financial Stability Review being published. Some of the stuff that will be in that was actually in the Reserve Bank's minutes, so I don't think there'll be anything particularly market moving or surprising there. But it's worth watching for anyway. Okay, I'll be back tomorrow, probably, but it'll be the last one for a while. But I'll explain that in 24 hours.